Hello, college accounting scholars. Hey, welcome to chapter 10. We are rocking and rolling here. Moving on to the revenue process, which, as you know, is going to add another piece to the puzzle. And we're going to learn in this chapter how the revenue process activities are recorded in the accounting system and how they are reported to users of accounting information and then evaluated internally. But let's go back to our handy dandy chart here and kind of get some orientation on where we are. We've looked in depth at the expenditure cycle in terms of how those events are recorded in an accounting system, whether it be manual or automated. We've looked at the conversion cycle to get an idea on how inventories move from raw materials to the work in process or WIP onto finished goods. And now we're going to talk a little bit about the front end of the process, the revenue cycle. So let's get started. So the first question is, what are the primary activities in the revenue process? And there's a variety here, right? Just as the other two processes, the first is you determine what your marketing and distribution channels are going to be. How are you going to sell stuff? Is it going to be through direct sales? Is it going to be through the internet? Is it going to be through retail channels? Those are decisions that would relate to determining your marketing and distribution channels. Then once you do that, then you actually start receiving and accepting orders. That's the good news, right? Order flow is the lifeblood of a company. So you receive those orders, and then the third step in the process is you deliver those goods and services to the customer. The customer's happy, and he sends you a check. You receive payment from the customer, and as all good organizations, you will then provide some level of customer support. All right, so those are the primary activities of the revenue process. Let's move on to which of the revenue process activities are accounting events. As we talked about before, accounting events are things that trigger some action in the accounting system. Okay, so we start out here with the delivery of goods and services. So what happens in the accounting system with regard to this particular area? Well, first of all, you have an increase in sales revenue. Always a good thing, right? Sales revenue can take the form, can be triggered by two things. You can increase your accounts receivable if you sell on account, but obviously if you got cash for your sales, you would increase your cash account. You would increase your cost of goods sold, right? Cost of goods sold is the cost associated with the goods or services that you delivered. And last but not least, you would decrease your inventory account because you would be taking items out of finished goods and delivering them to the customer. So make sure you've got those four items. Increasing sales revenue, increasing the accounts receivable and or cash accounts, increasing the cost of goods sold, and decreasing inventory. Okay, so then the second area is receiving payment from customers, right? And we mentioned part of this above, right? You're going to have two areas that are going to occur here if cash is involved. Either they give you cash up front, or they, if you do business on account, you will get cash when you collect that particular account. So increasing cash is obviously a big part of receiving payment, and the alternative entry would be when a accounts receivable account is paid, you would decrease the accounts receivable accounts. So those are the two items there: increasing cash and decreasing your accounts receivable. Okay, then you have other accounting events, and involved here is providing customer support. As shown here by this visual, there's a variety of activities that can occur in customer support, but the ones that specifically relate to accounting events is going to depend on the type of support provided. Some people charge for support, so that could initiate a whole different series of accounting events. But those are the three areas where accounting events are issued: delivery of goods and services, receiving payment, and then providing customer support. Okay, we are now going to really move on to one of our favorite areas, which is what is the basic flow of information in the revenue process. We talked about the basic flow of information in the expenditure process. We talked about the basic flow of information in the conversion process. Now we're going to talk about the basic flow of information in the revenue process. And so very similar. It starts with the customer, right? So make sure you get each of these steps in your notes. The customer places an order, and the credit manager approves the customer for credit, right? You're not going to ship stuff to a customer if he's not or she's not credit worthy. The second is involved the warehouse, right? In terms of the warehouse releases goods and notifies shipping. You can see the picture down at the bottom there. It's a typical warehouse scenario. Then you move on to the third area, which involves shipping and billing. When an actual good is shipped, shipping prepares shipping documents associated with that particular item, and then actually ships the goods to the customer. And then billing, as you might suspect, prepares an invoice based on the sales order and the shipping notice. As you kind of relate to these particular steps, you'll probably note that there are a bunch of documents associated here. There are shipping documents, there's shipping notices, there's sales orders, and as we talk about, these kinds of things literally drive the accounting system. Okay, then last but not least, all your records are updated. Your inventory, accounts receivable, sales records are all updated. So those are the first four steps of the basic flow of the revenue process. We actually have a couple more. And again, make sure you get these all in your notes. And it starts with the mailroom. They said, the mailroom, what the heck does that have to do with it? Well, the mailroom actually receives the check from the customer, and a remittance advice. A remittance advice is a record of payment, and actually the mailroom would then prepare a remittance list. Now this, with direct deposit and direct payment, this could change. The mailroom in many companies might not be part of the process because companies actually make electronic payments between their bank and the vendor's bank. So this may or may not be the case depending upon the type of company and the relationship it has with its customer. Okay, then we have something called a remittance list. And remittance list, again, is something that captures the cash receipts and the associated accounts receivable record. And once you have all that information, the last step in the process is the check is deposited in the piggy bank or the bank, depending on how large a business you have. All right, guys, we are going to we're going to end it here. Have a great night, and look forward to seeing you in class tomorrow for a quiz. Good night.